All right, welcome back, everybody. So, again, chapter 3, okay, is going to be a continuation of chapter 2, just because chapter 2 it dealt with a lot of other factors. Not only are we dealing with customers, we're dealing with two different types of sales forms, and we're also dealing with other things such as receiving payments from multiple various different types of transactions. And then also, lastly, we also talked about what happens when you receive those payments. You have to also deposit that money, that check, whatever form of payment you received. So not only that, now this is a continuation of part 2 of customers, where we're actually going to learn about, well, what happens when a customer decides to return something to us, okay? And then another section apart from that is going to be learning to, well, what happened if the customer decides to just not pay us, or they file bankruptcy and they just don't pay us in general, okay? And then also this chapter is also including other things such as setting up sales tax, which we briefly talked about in chapter 7. And then again, it's going to come upon here as well. And then lastly, we're going to talk about sending customer statements, and also if they other things like that, and then also reports. So this chapter is actually fairly short. It's also, it's a short read, but however, there's not so how the book teaches you how to write off the bad debt is going to be using the tax way. Remember, we talked about there's 2 ways to report or to write off bad debt. In the book, it shows you how to do it the IRS way, the direct write-off method, okay? Which, again, if you are the tax accountant, then you have all rights to go ahead and process it exactly how the book tells you. However, there's a section where because we are the accountant, or we're planning to become the accountant, I have to show you the other way, so then when you go into the future and you are being employed by a company, you know what to do when it comes to writing off bad debt, and you do it doing the allowance method way. So again, it is a short read, but there's also things that I'm going to be tacking in there that's going to show you what the book does, but also a real life scenario. Okay, so with that being said, before we get into all that stuff, let's go ahead and go through the book one step at a time. So the first thing first is going to be saying, well, what happens when a customer decides they want to have a return of a product or a refund, discount, whatever reason that they have a means to return a product to your store. Okay, so of course, with that being said, here are a few lists of reasons what would happen, or why they would want to return an item. Again, it could be based off of pure satisfactory. If they're unsatisfied with a product, that's valid reasons to want to return a product. It could be that the item is defective, or they just don't like the product overall, or maybe it's a gift. They just want to get money out of it. Whatever reasons that they are trying to purchase a product from you gives them every reason for them to want to return the product to you. Okay? So again, here are a few reasons for those things. Now, also, another reason why we would also potentially use a credit memo. Okay, so that's what we're going to be creating, is we're going to be creating credit memos that allows us to either refund the customer, allows them to give them an available credit for the next purchase available, or I believe the last one is kind of both, I guess. It can apply to an existing invoice if they have not paid for it yet. So those are the 3 options that you can get, and we'll talk about that when we actually fulfill our first credit memo. Now, credit memos are not just solemnly used for just returns and allowances. I guess we can go ahead and tack that in here. Credit memos could also be used if, in case a customer pays, but they didn't realize they paid and they received a discount. So now they're paying too much. So what your your responsibility as um, the vendor is rightfully give them a credit. So there's oftentimes, for example, when I've paid my credit card off, I usually pay the minimum, boom, 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 right? Done. Sometimes I don't even take a look at my account, or oftentimes what happens is I paid over than what my account was actually due for. So what they do is the company says, well, you paid us too much. So they create you a credit memo that basically either reimburse you for that amount, and what they do is they either send you a check in the mail or they leave it so then the next time you make a purchase, they go ahead and credit your account so then you can make more purchases. Okay. Now, that's one option there is in case a customer does overpay. It doesn't have to mean necessary that they return the item. It's just that they overpaid. So that's what this section talks about as well. But all in all, credit memos are generally used for primarily returns and allowances. Now, as we remember from accounting, we talked about what the difference between a return and an allowance is. A return is basically full money for the actual product, okay? Where an allowance is they're attempting to return the product, but for some reason we're able to convince them to keep the product or give them an additional discount, so then they, instead of refunding for the full amount, you're refunding a portion of the amount. Now, for corporations, no. The bottom line or the guaranteed is you're going to get a full refund, or we'll give you a credit that allows you to, shop again and shop more for in the store. There's no partial credits here. But if you're a sole proprietor, you do have that little leniency or that little flexibility to be able to negotiate deals with your customer. So again, we can haggle, so we can haggle our customers as well. Okay. So that is a preset notion for smaller general business companies, especially if you're a cash basis, right? You never ever want to say, oh, I'm going to give you a full refund. You always want to say, I can give you a portion of your money back, but not all of it. So that is general rule of thumb for credit memos is you are generally going to just use it primarily for refunds or returns of a product or service. Okay. So with that being said, let's go ahead and dive right into our first credit memo. So first things first is, so we actually have a pre-existing invoice that already has been created, so we don't need to create a new invoice in order to create this credit memo. Now, here's the weird thing about this is that it's actually not something that we can go ahead and be able to just click on the home page for. There is no button that says credit memo, credit memo, credit memo. Unfortunately, the only way that you're able to access the credit memo is actually through the invoice itself, okay? And I believe if you do go to your customer center, I believe if you do click on a customer per se, because you're in your customer center, you actually have more options that you can select that allows you to go ahead and create a credit memo, which right here you can create a credit memo using the customer center. However, for the home page, unfortunately, there is no icon that allows you to go ahead and bypass everything and create that credit memo right then and there. So again, you would have to, so the only way that you're able to do it is by going through the customer center, and you right click on them and you'd be able to create the credit memo. Unfortunately, let me see. You could create a credit memo through the manage transactions as well as the new transactions above here. But for general rule of thumb, it is actually going to be, let me go ahead and pull up Mr. Bob Mason, since that's the person that we're going to be working with. Generally, if we were to go ahead and double tap on an invoice, it's actually at the very top of the window. It will say refund/credit memo. So let me get rid of these little windows here. Okay. And it's going to be right here. Either you create a credit memo or you do a refund. Okay, refund/credit. Okay, so it's mostly apparent on the invoice. But if you were to go ahead and figure or want to do a credit memo, you can do it doing primarily only on the customer center. Okay. And I don't think there is one on the no. See, there isn't one on the menu bar either. It's just primarily solely in the customer center and the invoice itself. So again, the example here says that it wants to pull up invoice number 3947. So here we are, Mr. Bob Mason. All right, we look at this invoice. We already know it's past due because, this is a retroactive previous invoice. So again, now that we're here, okay, so in this invoice per se, it shows us that Mr. Bob Mason, he made a purchase, and we sent him an invoice, and he bought a total of 30 standard photo paper. Okay, so we billed him for the total of this $401.39. Now, Mr. Bob Mason decides to come up to us and be like, well, hey, I actually didn't need all of these photo papers. I end up not using them all, so can I get a refund? And of course, with your company policy, right, if you allow it, okay, depending on when you made the purchase and how long your return policy is, let's just say he did make it into the return policy. And I said, you know what? Okay, I accept it. I'll go ahead and either refund your amount if he's paid for it, or I can actually reduce his accounts receivable, or I can save it as a future credit that he can utilize to go ahead and apply it to the next purchase that he makes. Okay? Now, in order to do that, now that I accepted his return, what I'm going to do is I'm going to go up to the top here and actually click that refund/credit button. Okay? And when I do that, and then again, it's going to pop up another window that actually says credit memo on it. And because I am on Bob Mason's invoice, it's automatically pulled up Bob Mason's information. Okay? Now, if you go ahead and do this using the customer center, you can go ahead and toggle whoever's name in here. But the only thing is you want to make sure is that you know exactly which invoice you're dealing with. So that's actually rule 1 is you want to confirm which invoice number it is and what the details in that invoice is before you actually apply that refund and credit. Because if you're just going to just do a refund and credit, you don't even know which invoice, you don't know who, and you don't have the essential necessary information in order to complete a credit memo. So general rule of thumb is most, best way to create a credit memo is actually using the invoice. So you can know exactly what the detail is and et cetera, okay? Now, since I created this credit memo, this is assuming automatically, since it's pulling the information from this exact transaction, right, the 3947, it's pulling this exact amount because it's assuming that I'm giving him a full refund, as in I'm returning the entire amount. So this is where you're going to have to make your adjustments here. Okay, so first off, let's go ahead and talk about the dates. What day did Mr. Bob Mason request this refund? I have it as February 15.
15th, yep, 2019.
Yes, so I'm going to go all the way back, all the way back. Yes, all the way back. So here's also one rule of thumb. I think I did not mention this prior. When it comes to dates, you shouldn't type anything in there, okay? Because if you type in it, you might pull up the wrong date, or it might be the wrong per se day. So general rule of thumb is you always want to use this little calendar icon and select your option. So here I have to go all the way back. So I'm going to go to February. Oh, there you go. I missed it. February 15 of 2019. All right. And again, now it's going to say, well, what do you want this credit memo number to be? Always rule of thumb is if you're trying to apply it to the invoice or it's related to that invoice, you always want to label it as the invoice number that you originally associated it with, which was 3947, and you always want to put a letter C, okay, for credit. Okay, always, always, always. Now, of course, if you have some kind of a sequence or a letter that you want to use in regards to this, let's say this is supposed to be an allowance, then put an A. You know, it doesn't have to be C per se, but usually that's just the general one that they normally use. So you always want to use some kind of letters to associate this as a credit memo. It's supposed to go against your actual invoice. So here, I've already labeled it and titled it right there. Now the next section I want to do is I need to modify my actual credit, because I'm not refunding for the full 30 standard package paper. I'm only refunding a total of 30. So I'm at, excuse me, 10. I'm only refunding a total of 10. So there you go. I'm going to modify it by entering in 10. And what's going to happen if I click somewhere else, or if I click tab, it's going to automatically calculate how much this is. Now, for photo paper, okay, understand this. Was it something that's taxable? In this case, yes, it was. Okay. Now, in your book, it gives you this huge paragraph saying, if it's a service, then you leave it as is. But if it is a taxable item, general rule of thumb is you would need to create another line item so it takes the appropriate tax amount. But that's only if they paid for it. In this case, Bob Mason hasn't even paid for this invoice yet. So in this case, we are able to just go ahead and not create that credit, that line for the sales tax, because given that he didn't pay for it yet. So there's no tax that I have to reimburse, okay? Now this only applies if this person has already paid for the item, then you need to create an item so it can take out the proper sales tax from the sales tax item, okay? So that's something that you need to also consider when you're giving credit memos, right? Especially when you're refunding, you don't refund just the product. You also have to include tax if there is tax. And because when we record this, it's automatically calculating the tax for us and automatically putting it in a location for the sales tax payable. So if they've already paid for it, you unfortunately have to pull it back out and actually take it out. It doesn't come out of directly from your sales account. Okay. But this one's okay because he hasn't paid for it. So so since the tax has not been paid for yet, you're okay here. All right. Memo here is going to be returned 10 packages for full refund. Okay. And then everything looks good because we got the tax there because it is a taxable item. Santa Clara is what we charge Bob Mason. And yeah, everything looks good. So make sure that your window matches this in your book, which it should. And then once that credit memo is complete, we can go ahead and click save and close. Now, once we get that beep of approval, next thing is going to come up with this window. Well, what do you want to do with this credit memo? And this is what I was talking to you guys about. You can have three options, and you can only choose one. You can either, one, you can hold on to this credit and apply it to or make it an available credit for this customer to go ahead and use for his next and future purchase. You can also either give him the money back if he paid, or you can actually apply it to the invoice, which allows him to say when you apply it to the invoice, it's going to modify it. And when you open up the invoice again, then Mr. Bob Mason only needs to pay for 20 or for the whatever amount that's actually going to be displayed in there. Now, I think your book says to give him a refund. Yes, it does. It says to give him a refund.
Yeah.
But I actually want to show you what happens when you actually apply it to the invoice. So let me go ahead and just verify this real quick. Okay, so here's Bob Mason. So if I go ahead and give him a refund, the memo should actually look a lot, I mean, not the memo, the invoice should look, actually, the invoice is going to be, it's going to look the same. But I'm going to go ahead and give him a refund, and I'm going to click OK. So once that happens, now it's going to ask you to write the check out to Mr. Bob Mason. Make sure his name is spelled right. Make sure it's for the correct amount that we're refunding him from. And you want to make sure that it is coming from your checking account. And the date that you're going to release it is going to be whatever date that you want it available for. Make sure that his address is correct and everything, so on and so forth. Memo here says all this numbers. You can go ahead and insert here returned 10 photo paper packages for full refund. Okay. And then I'm going to go ahead and on invoice number 3947. Okay. And then we're going to go ahead and click OK. So once that beep of approval gets done, what you're going to see is now, again, as I've mentioned this before, because we didn't apply it to the invoice, it's still going to stand forth as if you sold 30 of the items. But what we can do is if you were to close out that window, even though my invoice stayed the same, right? It's still to say the same. It's still 30 items that you sold, okay? You still have now a credit memo right here, which allows you to say, well, he's also returned 10 of those items, and you have the associated invoice with the letter C on it, okay? So that's what happens when you actually don't apply it to the invoice, because Mr. Bob Mason has already paid for it, but yes, Mr. Bob Mason has already paid for it. Okay, so again, the payment's right here, but the credit memo, because he already paid for it, I decided that I'm gonna give him his money back by giving him a full refund. If you applied the credit directly to this invoice, it's just pretty much going to lower his amount that he owes. But again, he already paid for it, so that doesn't make sense to do it. But if he is outstanding and it is an open invoice, it will just change the amount on his invoice. And when he actually makes a payment, then you can apply the credit memo to it, and it's going to show up that he only owes not 401, he owes less than that. Okay? Any questions in regards to that particular part in, or just credit memos in general? Yes.
Granted, you do it on the invoice.
Mm-hmm.
Do you have to mail another, what you call this now, statement to the customer, or just wait till the payment is due and then just deduct or whatever,
It is
so that
general rule
that
of
he was
thumb.
aware?
Mm-hmm. It is general rule of thumb, or even a good business practice, to go ahead and send your customer a new updated invoice.
Yeah. Okay.
Okay, and what you can do too is, if you did apply it to the invoice and you bill that customer, what's going to happen is you can actually edit this particular invoice and put an R on it for revised. Okay, so if you guys remember from Coffee Cafe, that was one of the things that we actually did. We actually revised either an invoice or a bill or something like that. So that's what you're going to be sending out is you'll have your original one, your 3947, then you'll send out a new one with the updated amount with the credit applied to the invoice and the return stated on there, because it will show you that there is a return on there, and you would just modify it by sending a new form that says 3947 R for revised, or whatever you want it means. It means to make sure that you understand that this isn't the original invoice. It's a new invoice. It's a revised invoice. Okay?
Thank you.
Mm-hmm. Any other questions?
Nope, I'm good here right now.
Okay.
Yeah, I'm good there.
Yeah, so so that's what happens when you give a refund. But if you want to no, it's okay, because when we do the applied to invoice, it will make a lot of sense on the next section. Okay, so that's how you do a credit memo. You can just right click and do a credit memo that way, but it has to be on an existing invoice number. Okay, so that's just, I think it's the best way to do it is actually look at the invoice, look at the details in the invoice, and then go ahead and apply, request that refund. Okay. All right. So now that is how simple and easy a credit memo works. You just click on the button, fill out what the refund was for, go ahead and click that OK button. Either want to pick one of the options, either give a refund, apply it as an available credit, or apply it to an invoice, and boom, it's done. Okay? So now the next section is going to be writing off a bad debt. So again, this is another little quick review for accounting. We learned that there was 2 ways to write off bad debt. One is doing the direct write-off method, which directly allows you to write off an accounts receivable and directly write it off as an expense. Okay? But that is only meant for tax purposes only. And what do you know? QuickBooks is a tax kind of, it's more geared towards to make it easier to file your taxes. So with that being said, it is meant, the whole purpose of QuickBooks is to primarily gear towards tax preparation. That's why they have tax line items, and it's just easier for you to write off taxes. But one thing is that you're not the tax accountant, so you actually don't have the authority, or you guys don't have the upper hand to be able to write off bad debt directly. You, unfortunately, as an accountant, what we do is we have what's called the allowance method, which you guys know, where instead of writing it off as a bad debt right away, you're just going to recognize that someone's not going to pay you. You're going to temporarily create an account, and you're going to place that in that account until you've exhausted every single method and ways to try to get your money back from that person. And once it's at the end of the year or maybe end of 2 years, where you know that this guy's just, or this person is just never going to ever pay you back, or they cannot budge, or for some reason you just can't get anything out of them, then that's when you can safely remove the allowance and go ahead and write it off as an expense. So in this case, direct write-off is quick, easy, and clean. It's boom. But for the allowance method, there's a few steps and a few measures that you have to take in order to process it and be able to safely write off the bad debt. Okay? So with that being said, this is how the book is going to teach you, and this is what the book is going to, if you have a question in regards to how to write a bad debt, you're going to utilize the direct write-off, because that's what the book says, okay? Because that's what you're being tested on. Now, the second time when we come from break, I will teach you the allowance method, which is going to be what you guys are going to be practicing, especially when you're going on and working for a company, right? At least you'll understand that this is what you should do, because you're not the tax accountant. You're the general accountant for the company. So if you are the general ledger, general manager, whatever type of accountant you are, and not the tax accountant, then you're going to be utilizing the allowance method, and I will teach you that today. So with that being said, of course, as we talked about what credit memos can do, we talked about making it an option for, let me see, we made it an option where you can utilize it if a customer overpays. Another way that you can use a credit memo is to actually write off bad debt. So again, the functionality of a credit memo is beyond than just a return or a refund. It also allows you to write off bad debt that people are just not paying for. So same thing as before, in order to create that credit memo, we're going to go ahead and look at an invoice. Let me see. I think we have to. Okay, we're gonna go ahead and look at a pre-existing invoice that has already incurred. So I think it's going to be the Anderson wedding, Mr. Right here. It's going to be for the Sade and the Sati and the Naveen. All right. Let's look at their invoice real quick for 4,003. Okay, so this person has been billed since December 21st of 2018. If we're going back to the time period that we're working on right now, we're currently in February 2019. This bill has been overdue for past 2 months now, and we haven't seen them budge at all. Okay, now that we recognize that this person is going to indeed have that potential bad debt, we need to make the necessary procedures in order to fully process this credit memo with the bad debt item. Now, before any of that can happen, we need to ensure two things. We need to ensure that there is an appropriate account for where the bad debt can be transferred to. So we're going to see if there is a bad debt expense item. So I'm going to go ahead and write bad, and let's see what happens. Boom. I do have an existing bad debt, and it is an expense item. So at least we have that one thing there. All right. We have a place where the money can go and can basically another placeholder account. So now that we have that, I can go ahead and create my second thing, which is to have the bad debt item. Okay, so again, refresh, there you go, refresh. So instead of going to your chart of accounts, now we need to go to my item list. So I'm going to go ahead and go to items and services. And as I can see through here, I know that I don't have a bad debt item because the next step in your book tells you to create one. So I need to actually create the item itself. Okay, so I'm going to go ahead and click new. And this time, it's not a service. Obviously, it's not an inventory part. What it actually is, it's going to be labeled as an other charge. Okay, I don't know why it's like that, but I'm just gonna go ahead and go with what the book tells me. Okay, so it's gonna be categorized as an other charge. So the title of this is going to be obviously a bad debt item. So bad debt. Okay, and then I'm gonna go ahead and link it up with an associated account that's going to be there, which is going to be your bad debt expense. Okay, when I type in bad debt. So here you go, bad debt, boom. Okay, now of course, is there a percentage? Is it taxable? I'm gonna go ahead and just leave these blank just because, again, you're not going to know how much the item is going to cost or how much you're actually going to be calculating. It's not a percentage, and it's definitely not going. It could be taxed or non-tax, right? You can always change this, but in this case, as long as I have the account linked to a bad debt expense, that's all I need. And I'm going to go ahead and click OK. So here I now have my bad debt expense item. I should probably put a description for it. And I'm going to go ahead and say oops. I accidentally pressed that, so this is supposed to be 0. Okay, so here to write off bad debt. And now I can go ahead and complete my item right here. Okay, so now I have two things. I have an account, I have an item. Now I can go ahead and apply this item to my invoice. So again, I'm going to go back to my customer center. I'm going to go to Anderson Wedding for Sati and Naveen. And I'm going to go ahead and double click that invoice again. And I'm going to look at what they have. In this case, they bought 2 indoor photo shoots. So they are outstanding to me for $190 even. Okay. So I'm going to go ahead and apply a refund/credit. All right. Here you go. I have their name in there. Okay, so the Anderson Wedding Sati and Naveen. One thing I need to have here, it's not going to be the 3948C. It's actually going to be 4003C because that's what it was for. And in this case, I believe it is the same date. No? Let me see if it's February
20th.
February 20th. Okay, so we did this a couple days later. So this person's been outstanding for 2 whole months. Okay? Now here, instead of actually refunding them for the actual indoor photo shoot, what's going to happen is I'm actually going to insert this as the item, the bad debt item I just created. Okay, so I'm in the wrong box. So I'm going to clear this out. So I'm going to expand it so you guys can see. So here I'm going to actually clear this out, and I'm going to associate this with the bad debt line item. Okay, bad debt. Now you're going to get an error message saying you do know this item is linked to an expense account, right? And of course we know what we're doing. So I'm going to go ahead and click don't show this message again. Okay. So now we validated that this is going to be the reason it's going to happen. Now, of course, what happened to the amount that's in here? It's giving me a zero balance because I remember when we set up the item, we don't have a particular number that we're actually having in here. In this case, I'm going to go ahead and write that this is one item because you need to have one bad debt item. And the amount was for the $190. So that's also something you need to also make sure that you understand is that whatever the bad debt item is for that particular invoice, you need to make sure it matches it. And in order to do that, you can always, have the invoice on the left side and then your credit memo on the right side, just so then you can see to make sure that they align. So again, I'm going to make it's supposed to be service. So again, I can override that. So because there's a service item attached to it, boom, it's going to automatically tell me that there is no tax in correlation to this particular item. Okay, so if there is tax, it's going to calculate it. If there isn't, then make sure that it is for the total of 190. Okay, there you go. One line item for the bad debt to give you 190 to equal total 190. Okay, and then of course I'm going to go ahead and insert in my little memo here that this is going to be writing off bad debt. Okay, and once I've done that, I'm going to go ahead. Everything looks good. I have it for my invoice for 4,003. It's zeroed out for 190. I'm going to go ahead and click save and close. And again, this is now where you have the option. Are you going to retain it as an existing credit? No. Anderson Wedding hasn't paid me anything, so I'm not going to retain it as a credit for them. I'm not going to refund them. They didn't pay me yet. So what I'm going to do is I'm going to apply it to an invoice. And I'm going to click OK. Now it's going to give me another window to say, well, which invoice are you planning to apply this for? Obviously, it's going to pop up Anderson Wedding, Sati, and Naveen is because I already associated that there was a credit that's involving with this invoice right here by placing the name in there. Okay, and I'm going to go ahead and select that, and I'm going to go ahead and click OK. Now, it should apply it to my invoice. So here, there's my invoice. So now my amount is now zeroed out. And that's how you write off bad debt. Okay. Any questions in regards to writing off bad debt?
No. Not so far, no.
Okay. All right. So that was writing off bad debt using the direct write-off method. All right. So I'm going to go ahead and click save and close. So there you go. That transaction is done and it's complete. Now, what I'm actually going to do is now that it's, I'm trying to think. Today's Tuesday, so, let's take a quick, let's go ahead. Yeah, no. I was thinking about that too, but today, Michelle, your kids are home today?
Yes, ma'am. Yeah.
Oh, okay. Actually, you know what I'm going to do is, let's go ahead and call break right now. Because there's actually something I have to do. I completely forgot to do. So, I'm going to go ahead and do that now. So let's go ahead and call break and, resume back at, let me see, I'll call break at 2:30. So, let's do a 20-minute break. So I'll be back at 2:50, please. And then we'll finish up the rest of the day. Okay?
Awesome.
All right. See you then.
Okay.